This Excel model helped a commodity data company understand the size of the opportunity to sell to financial firms and what target spend levels individual companies should have. They knew financial firms were buying their data, but couldn't tell which prospects were worth $10,000 versus $100,000. I built this to analyze 800 companies using a number of different data sources. It identified 1.2 million in realistic revenue growth. Let me show you how it works. A financial company's overall revenue doesn't tell you how the chemicals industry. So we gathered multiple indicators of their market activity related to petrochemicals, investment banking deals, equity analyst coverage, ownership stakes, and normalized each of them on a 0 to 1 scale. These indicators are then weighted. You can see the weights at the top here, and combined into a single activity score here that determines. So 1 is the top tier and 3 is the lowest. The weights are adjustable, which really helps calibrating the data to come up with useful results. So you can, tweak this and say, this is lower weighted, and you can see that the tiers and the weights change when you do that. Once companies are classified, how do we estimate realistic spending potential through peer group benchmarking? So let's look at a group of companies with similar size and scope relative to Petchem's market information. Let's say Tier 1 banks. Current customers at Tier 1 banks prove how valuable this information is to companies. They're spending $126,000 at the 75th percentile. We've shown that companies A, B, and C value the information enough to pay whatever, $120,000. Similar companies should be paying similar amounts. So we can fine tune by setting our target spending level at whatever percentile we want of current customers. So we could be a little more aggressive and say, we want to set it at the 90th percentile of customers, or a little more conservative and say 75th. The filter uses this to isolate the peer group first, and then percent, apply to set realistic targets. The formula here uses filter to isolate the peer group, and then percentile to set realistic targets. Flexibility built in. Tiers. So if a salesperson goes into a certain target, maybe their investment is small now, but they're building a new unit, so they're really ramping up. So the indicators showed they should be at Tier 1, but maybe they should actually be at Tier 1. So we can just action. Over here as say that I want. I say, these. These 1, maybe these 2 companies should be a Tier 1. It's broken down by rep here. So the sales team has their list of targets. Get started going after that additional $1.2 million in opportunity.